All right, so here we are, Tuesday morning, and I'm finishing in the green. Green on 2 stocks, red on 2 stocks. I traded 4 in total, and I took probably about a dozen trades as these stocks were moving up. Now, I started the day in the red, which is always tricky. I don't like it when my first trade is a loser, and I don't like it when my second trade's a loser. And if my third trade's a loser, I'm starting to feel like 3 strikes, you're out, especially depending on the size of the losses. If each of the losses are really tiny, I may continue. But in any case, today, I started the day with 2 losers, and they were just like back-to-back rejections. And I was like, man, all right, I'm feeling a little nervous. So then when that third stock came along, I traded it a little more conservatively, but it ended up being the winner, but I didn't make as much on it as I could have because I was already a little bit cautious from those first 2 trades. So had some gains on that one, but it got really choppy and did a nasty false breakout, which I'll show you during this recap where I gave back a bunch of profit. So we got that drop and then it rallied back up, made it all the way up to new highs. So overall, not a super clean day, but there were some good opportunities and I did get myself into the green and I'm finishing in the green. So let's go ahead and dive into today's trades. All right, so let's get into it. You can see my P&L here on the top of the screen, top left corner. This is what's streaming while I'm trading. So while I'm trading at Warrior Trading in the chat room, you can see my P&L in real time. So you can see when I'm getting in, you can see when I'm getting out, when I'm up or when I'm down. So this morning, my first trade was on CADL. This one, you can see, was on the scanners right down here. And it popped up with some news pre-market. And if we look at this chart, you'll see this was kind of wild. So I got in the middle of this candle, which spiked all the way to a high of 350. And I ended up losing, how much was it? $567. So it was really wild because basically what happened was I was watching news at the top of the hour, 8 a.m. 8 a.m. comes, the stock hits the scan. I pull it up on the level 2. I'm like, okay, this looks good. I'm getting in for the break of 2. So I got in at, it was like 187 or something. All of a sudden it zips up to 350 and I was like, whoa, what is happening? And then it flushes back down here on this candle to $1.20. And I just kind of held through that move because I was like, what is going on? Is this something I should be adding to? How good is the news? But it just rejected. So I would say this was more or less an algo spike, an algorithmic trading spike, where some orders came in, all of a sudden the bids and the offers specifically get pulled. So the reason this happens is because these high frequency trading algorithms, let me get the whiteboard out, they do not want to become buried in a stock that's ripping up with news. So just push this out of the way. So what you have here is, so let's just imagine, for instance, the level 2 on a stock. So this stock was at like $1.20, and we're going to do it sort of like I don't know what you'd call it. Like we're going to look at it like this. So this is $1.20, $1.25, $1.30, $1.50, $2, etc. Down here is, $1.10, $1.90, 80 cents. So when a stock initially starts popping up, the market makers, their job is to make the market. So they have orders to buy on the bid down here, and they have orders to sell on the ask. But if all of a sudden, so they're subscribing to market data, and they subscribe to a different level of market data than you and I would have. So if all of a sudden they see a surge of orders come through for, 50,000 shares or something like that, they see those orders come through, and they can begin to pull back on the orders they have and start moving them up in price. Because otherwise they're going to sell 50,000 shares of this stock to someone at $1.25. Next thing you know, it's at $2.50 and they're down over $50,000. So to manage their risk, they're automatically adjusting orders based on the market. But when we have news, in this case, 8 a.m. top of the hour, we have news that comes in, all of a sudden these orders come in, and then the buy orders buy orders that might have been otherwise out here, all of a sudden they just get pulled off. This one's gone, this one's gone. Now there's only a few left, and they just start disappearing. And that creates a situation where people that are buying or are covering a short are now have no choice but to buy at, $1.50 or $2 or higher. And so all of a sudden you have these stocks that can rip up super, super fast. And we call it an algo spike. And the reason we call it an algo spike is because it really wouldn't happen if it were not for the behavior of the market makers. And essentially, they're making the market by being on both the bid and the offer at the same time, but they also have to manage their own risk, and so they'll pull those orders so they don't become short a stock that's ripping up on great news, or long a stock that's dropping on bad news. So they're constantly moving their orders around. And in a way, you can capitalize on these algo spikes if you're really quick and you're jumping in, because sometimes these make huge moves and they actually hold up. But what can also happen is it makes this initial spike and then the volume slows down, and then all of a sudden they fill their orders back in, and now the stock starts dropping because there's not enough buyers. So you can get these sort of whips of volatility, and that's what we got on CADL. So my first trade on it, I was in going for the break at $2. It did break too, went all the way up to $3.30, whatever. But I stopped out with a loss of $567. All right, so that was a news trade at 8 a.m. top of the hour. Next trade was MOB. MOB also was a stock that had news this morning. And this one also did this spike right here. And this one I was red on again. So I jumped in as it was squeezing up to $2 for the break of the whole dollar. It goes up to 226 and then it flushes back down, and I lost on that one $400. Okay, fool me once, shame on you. Fool me twice, shame on me. Fool me 3 times, you're not gonna fool me 3 times. So that's why when ADTX popped up, I was like, you know what? I don't know. This one, yeah, okay. Well, the other 2 had news also, so this one has news. Big deal. It didn't matter on those previous 2, but this one's the one that held. All right, of course. Isn't that the way it always goes? So I don't take big size on it. I trade it much more conservatively. I think I bought maybe, I can't remember. It's like 1,000, 2,000 share starter, small size. I end up making a little bit of money. And then right in this area here. So in this area, we were getting an ABCD pattern. The pop up, the pullback, the pop up, the pullback. And right through there, we got a nice squeeze through the highs all the way up to a high of day of about 750. So through that move there, I got myself up just under $5,000 on ADTX. Now you'll see right now, I'm only up $1,400 on it. That's right. So on ADTX, I got myself up 5,000 in this part of the move. Rather than trying to jump in as it was squeezing, I was like, I think I took a small trade in here, but I really waited for it to prove itself and got more aggressive in this area here. So that was the right move. Now it drops down. I think I took a couple dip trades, nothing big. But on this right here, I got back in anticipating this as an ABCD pattern that we were going to break through this high. That was a fine idea, but it did not work. In this candle, we went all the way up to about 740 and then dropped all the way down to 625. And I was in at about 730, 725 with 8,000 shares. I was stepping up to the plate. I stopped out at about 680, 690, 680, something like that. I lost $4,000. So I went from up 4,000 on the day net, because even though I was up 5,000 on ADTX, I was still down 1,000 from these trades. So I went to up, basically, I went from up 4,000 to down about $600. It was about $500. No, it was 600. It was 600. So all of a sudden, I'm like, wow, easy come, easy go, right? And that is trading. Easy come, easy go. I was up $4,000. I could have taken that off the table, but I had a $13,000 day on Friday. I've been having some nice green days. I thought this setup, if we broke through this level, we were going to 8. Well, I guess we did, but not when I thought it would. These topping tails were a warning indicator, but with this recovery here, I sort of thought that we were gonna make an attempt at it. What really happened was, and this was like instantaneous. So it's going up and then instantly drops. How does that happen? I think someone pressed the sell button for probably a 50,000 share order or more and just sold it basically at market price. And that caused a flush. 50,000 shares going through caused a flush, and then more people panicked out and stopped out, which caused the volume to go up. Now, maybe the volume on, maybe that was a 100,000 share sell order. I don't know, but it was a big one. So a big order goes through, it immediately flushes, and then people are panic selling after that. Could have been a short seller, maybe. Could have been someone who's holding long. I'll never really know, so speculating, I guess, doesn't matter. But it was a nasty rejection. So then I was like, all right, I'm going to hold tight for a second. So it curls back up here. I was like, all right, well, that's a nice curl. It comes back up here. And at the open, I took small size on this trade right here. Only bought 1,000 shares. Now, had I not taken this loss here, I might have bought 5,000 or 8,000 shares like I was in on this one. But I was down at this point. I took a couple scalps in this area. So I was down still about 300 on the day. And I was like, you know, think about this, Ross. You're down $300 on the day. It's 9:30. You could just call it a red day. And it's a small red day. It's tolerable. It's not that bad. But I did like this setup. I thought it was going to go. So I bought small size. If I had gone red and gone to down 1,000, I think I would have cut it at that point. Now, I was darn close to my daily goal. And I gave back more than half in one trade. That's definitely an emotional trigger. I was able to keep myself pretty calm. Surprisingly, but I was able to keep myself pretty calm. And anyways, got a little trade here and then a little dip and rip on resumption up here. And I got myself back to up 1,200 bucks. And then I gave back 400 of it on, I don't know, might have been this trade here or something like that. Anyways, I got to a point where I was like, you know what? Let's just take the $800 off the table. It's nothing to write home about for me, but it's a green day. And green is good. Live to trade another day. It's unfortunate that I got caught in that jackknife right there, but that's trading. You know, easy come, easy go. This is just the way it is. And the fact is, if it wasn't that one, I could have gotten caught in others. There was another one right here, you know, drops and then goes into a halt down. There was another one right here. There were these two up here. So being aggressive on this one today, probably for most traders, didn't pay off super well because it was quite choppy. I'm not sure why. Some stocks just are. They could be choppy because there's people who have been holding it for a long time, who are bag holders, who are pressing the sell button. It could be choppy because of some degree of institutional trading that's going on. You know, big money traders trying to do something with the stock. We saw that with obviously GameStop. You know, it's just kind of hard to say why. But when a stock shows that it's got this tendency and this behavior to be choppy, you know, at that point, I sort of say, all right, you know, I just probably can't trust this one. Could it go higher today? Sure. I mean, there's a lot of time left in the day, but there'd be a trade-off for me continuing to trade and sit here until 4 p.m. While I might make more money, you know, time is the thing that, you know, you can't get more of. So I like to moderate how much time I'm willing to spend sitting in front of the computer, staring at these screens, and try to live a healthy life. So I got in this morning, got a couple hours of trading from 7-ish until, well, 10 a.m. And that's going to lock it up for me. I'm going to call it a day. So yeah, 800 bucks, green day, nothing to be super excited about. This month, I'll have to upload my metrics and I can go over them maybe in tomorrow's recap to see where I'm at on the month. I did have one red day it was actually last Tuesday. I'm pretty sure I was red. So I think I have one red day this month. Today was pretty close to being a red day, but ended up recovering it. Anyways, being red 500, being green 500 doesn't really matter. I just try to remind myself, it's neither my best day nor my worst day. It's just a regular day. So, you know, who cares? It's water under the bridge. Did the best I could today. We'll try again tomorrow. And you gotta just have that attitude. Trading is risky. Easy come, easy go. So life is good. I'll be back at first thing tomorrow. And I hope you guys enjoyed this recap. And I'll put a link to another episode right here in the top corner that YouTube thinks you're going to love. And I'll see you for tomorrow's recap.